The crude oil price had already begun the climbing this year as the Omicron variant and this new trade on that time that had accelerated. And after its slowdown, the impact has been decreased and the global economic activity is climbing up towards a normal situation that have spiked alarmingly since the crisis have developed. And it is a bad news for India that import 80% of the needs that the first 10 months of the fiscal year currently running, that is, the India imported almost 176 million tons of crude oil that's worth 7 lakh crore, including 2 billion, 15,200 crores from the Russia. And this current situation in Ukraine-Russia war tension and this kind of activities and those involvement in the entire Europe and those important countries that export the crude oil, and India is the largest importer of the crude oil from the Russia, and this situation that may rise in the domestic fuel prices, that seems to be a very important factor that center will have to decide whether to pass on the higher cost, set those new values to the consumers, or continues to absorb the financial hit to curb the inflation. The crisis that will also throw out those macroeconomic assumptions that the projection of budget 2022 and the economic survey that is based on the crude oil prices that were expected to remain around 70 to 75 US dollar per barrel, and now this war tension, that is a tremendous rise in these crude oil prices. Initially, the first week of war, that is $105 per barrel, and few days, just 2-3 days before, when this war has been in a rising condition, the rising mode, the value of the crude oil prices touches $140 per barrel. Now it's slightly decreased, but it's a very cause of concern for India, that India is a major oil importer from the Russia, and this war effect, the adverse effect of this war that affecting the crude oil prices, and it can lead to the inflation. It certainly that the financial hit in terms of inflation due to this higher value of the crude oil prices, and that is a cause of concern for India's economy, India's domestic consumer good prices, the domestic and supply. India's GDP growth projection of 8 to 8.5% in the financial year 23, that is higher than the Reserve Bank of India's forecast of 7.3%, that is below the International Monetary Fund 9% assumption. That's some fiscal math that is working towards those new way of government procedure to mention and depict those current situation of the Indian economy based on those elevated oil prices, the price of the crude oil due to this Ukraine war tension, those effect. In some hope that we have maintained the high fuel excise duty that the government will maintain, and that have a buffer to fall back in this situation. The price may be in a lower side, in low valuation, that should use those money, the entire increase in the oil price. The consequences for the India, that will depend again on how those prolong the conflict that will be in the forex reserve of those 51.5 lakh crore that experts say that the country will be able to weather the short-term external shocks, and that fairly well for the prolonged war that take a several toll, and that impact that will be felt on a number of fronts. And the fuel prices and the overall inflation to trade those interruptions and turmoil in the equity market, and that hit the high fuel prices inevitably drive those inflation, and India's situation in currently that the war has created globally, and those tension in Ukraine-Russia war, that the high fuel prices, that basically the crude oil that drive those inflation situation, and that comes at a time when the countries are already battling the inflationary trend. The modern result that the trillions of dollars central bank pump into their economies to tide over the pandemic situation. The RBI report suggests that the $10 per barrel increase in the oil prices has about 24 basis point direct impact and 26 basis point indirect impact on the retail inflation. That the most important and most pacific situation, and that the most vulnerable section, that the retail inflation area, the consumer price inflation. The India's retail inflation that has a 7-month high, that's a 6%, that the RBI target inflation ceiling, that the high inflation in food prices that jumped to the 14-month high of 5.43%. That's the key reason. That's an important factor that India will look into. RBI's guidelines and the monetary policy will control this pumped valuation of the money that the Indian economy are facing. I mean, they have demanded how to maintain those situation and control the inflation that have arisen due to these high crude oil prices, and that's the recent monetary policy review also working towards keeping those rates unchanged, but very little minor change, that's the maintenance for the support for the growth and the risk that is uncontrolled inflation, and that's impacted the many economic factors, the consumers to the manufacturers, the security brokerage, many important estimation, the twofold economic impact of the Russian invasion, the high crude oil prices that will keep the CPI inflation higher for the longer than that RBI will more than the 2 rates of expectation in the high price in the upcoming October-December cycle this quarter, and that's the Russian important situation in the Russia, that the trading with Russia, many sanctions with the Russia, international ban, the SWIFT ban that is important for the financial firm that made, and the SWIFT excluded from the Russian bank and the transaction globally. It is isolation from the international transaction, the international financial situation, the exclusion of Russia that may impact for the online transaction, the trade relation, the export-import relation with India, and India will face those difficulties due to these restrictions for the Russian bank, and they have created, I mean, the sanction made created a tremendous types of hindrance for the India's economic and trade relation to be maintained, the trade partnership that working towards a liquid exchange of data exchange and many other important, I mean, material and other important factor to supply, and that's India will be facing, and that may cause a demand in the domestic prices, domestic retail inflation rises, and these crude oil high prices that makes a very difficult situation. And the interruption in the flow of grain from the Black Sea region that could also stoke the food inflation. That will be definitely higher side, and coming month it will be a great disruption in the global disruption that have made themselves out, and that account deficit that will worsen, and the exchange rate will also be effective, and that is how the GDP growth also impacted due to this situation. How to this can be handled by India, that will be a wait and see, and that will be very interesting for the proper economic growth, the right direction of economic growth in this kind of uncertain and turmoil situation in the European nations. That's all for now. Thanks for watching. See you in the next video.